Have you ever wondered why the Federal Reserve's decision to pump money into the economy backfired? Let's delve into this a bit. The Federal Reserve, or the Fed, as it's commonly known, holds a significant role in managing our economy. They act as the nation's central bank, controlling the money supply and setting the tone for financial stability. Now, a key part of their role involves making decisions about injecting more money into the economy. This action is typically expected to stimulate economic growth, as more money means more spending, and more spending means more business activity. It's a cycle designed to keep the economy humming along. Moreover, the Fed's decision aimed at combating inflation. Inflation can be a tricky beast to handle. It's like a seesaw. Too much can lead to a financial crash, but too little can stagnate growth. By pumping money into the economy, the Fed hoped to strike a balance, a way to keep the seesaw level. But as we all know, things don't always go as planned. Expected outcomes, however, don't always align with reality. So, why did this well-intentioned move backfire? Good question. Let's delve right into it. When the Federal Reserve decided to pump money into the economy, the intent was to stimulate economic growth. It's like adding fuel to a fire to make it roar, right? Well, not quite. Instead of the anticipated boom, what we witnessed was a sudden influx of money leading to inflation. Imagine a sudden downpour flooding a parched land. The land can't absorb the water fast enough, leading to flooding. Similarly, the economy couldn't handle the sudden influx of money, leading to a surge in prices, also known as inflation. Now, here's where it gets tricky. Inflation doesn't necessarily mean the economy is growing, it simply means the cost of goods and services is increasing. So, while you might be seeing higher numbers, it doesn't translate to more value. It's like running on a treadmill, you're moving, but not really going anywhere. This unexpected turn of events put the Federal Reserve in a bit of a pickle. Jerome Powell, the Federal Reserve Chair, cited ongoing inflation pressures and strong job growth as reasons for the reluctance to cut interest rates. Cutting interest rates is a common strategy to stimulate economic growth, but in this case it could potentially add fuel to the already raging fire of inflation. So here we are, with the Federal Reserve trying to balance on a tightrope. On one side we have inflation, and on the other we have economic growth. It's a delicate act, and any misstep could lead to a tumble. Unfortunately, the soft landing the Federal Reserve aimed for seems to be more of a bumpy ride, a classic case of best-laid plans going awry. But as we navigate this economic roller coaster, it's important to remember that the journey is just as important as the destination, and we're still on the ride. Let's take a moment to summarize what we've learned. The Federal Reserve, under the leadership of Jerome Powell, made a critical decision to pump money into the economy. The expected outcomes were to stimulate growth and counteract the effects of the pandemic. However, this well-intentioned move did not go as planned. Instead, it backfired, leading to inflation and intensifying economic uncertainty. The Fed's strategy was akin to walking a tightrope, balancing the need for growth with the risk of inflation, but the balance tipped and inflation pressures surged, proving that economic management is no easy task. This situation underscores the Fed's ongoing challenges in navigating the murky waters of post-pandemic recovery. The Fed now faces the daunting task of achieving a soft landing for the economy amidst these uncertainties. It's a tricky situation where they need to maintain current restrictions to battle rising prices, but also have the flexibility to cut rates if necessary. In the world of economy, there's always a balance to strike, and the Federal Reserve's recent decision shows just how delicate that balance can be. If you like this video, don't forget to rate, subscribe, and share so we can keep you up to date on what's important in our tiny fraction of the universe. And as always, take care.